ADP employment report for March about to be released in a little under 10 seconds from now. Right now, we've got red across the board. Dow off about 282 points. And we are going to get over to our good friend Steve Leisman, who's got the numbers.
Thanks very much, Andrew. March ADP payrolls coming in at 155. It's good economic news. Have been a little short of that stuff. Now we got some going here. The estimate had been 120,000, but this coming in a little bit hotter with the goods sector doing pretty well at 24, and the service sector powering 132,000 on the plus side. There's the estimate for Friday, the BLS number, 140,000. So this on the high side of that. Remember, ADP just doing the private payrolls. And good distribution by business size. Small business coming in plus 52, medium plus 43, and large plus 59,000. Looking at where the jobs were, professional business services up 57. It's been a kind of lagging sector, so that's a good sign there. Financial activities doing well. Manufacturing up 21. Leisure and hospitality down at 17. The good part about that is it's been the one that's been leading, and now other sectors look to be stepping up. Educational health services up by 12,000. And the wage numbers coming in tame. When we were concerned about inflation, I guess we're still concerned about it, up 4.6 and 6.5%. These numbers are a little bit hotter than the government numbers. Worth checking out. Andrew, on Friday, what we're looking for, this is good news going into Friday. I will point out that ADP has been running about plus or minus 100,000 different from the BLS private number. So there's been a divergence there in what ADP has been reporting. But for Friday, we're looking at the government numbers, and I'm seeing estimates right now of something like, from the federal side, minus 10 to minus 20 from the federal government. The first year of the Trump administration, when he put that hiring freeze in place, they were down just 17,000 in that first year, but this might be more serious. You know that the federal government loses, or just regular attrition and separations in total, about 30,000 a month. Of course, not all jobs have been subject to the DOGE job cuts, but that is going to be one place where to drag. And the question is, does the private sector step up? That's the question for Friday.
Put your head in the head of Jay Powell watching all of this. Of course, he's probably going to be watching at 4 p.m. too to hear what the president has to say about tariffs. Of course, I don't know if there's a move for him to make it relating to it, only because he's got to be data dependent and wait 3 months before he hears, what the true impact is.
Yeah, I mean, I think he's going to obviously be watching this. He's going to set his 400 PhDs to work and get the models running and see how all this spits out. There is a school of thought out there. A couple papers I've read suggest maybe you want to cut rates into the negative impact of tariffs, which would require you boldly as a central bank official to look through the impact on the price level, which is what tariffs will do, and say, you know what, I believe pretty firmly that I need to address the unemployment side or the growth side and not worry about the inflation side. I don't think Powell does that. I don't think anybody would have the nerve to say, I'm going to cut rates into a rising price level. I think shortly after, when you can be confident, this is what Tom Barkin told us on earlier this week, when you can be confident inflation is rolling off and that these tariffs are not spreading more widely. I thought what Courtney said was really interesting. The idea that you might want to hold the price of a tariff good here and raise it someplace else. That just really complicates the Fed's job of finding out, is this just tariff related or is there something else going on? There's psychology involved, inflation expectations. So my best bet is that I think the Fed waits till all of this is clear. And I think that means they cut a little bit later, if they are going to cut, than the market now expects.